In this 2023 preparatory examination paper, we will be preparing a bank reconciliation statement, starting with correcting the cash receipt and cash payment journals, and then also correcting a bank account balance. Then after we are done with all of that, we will be preparing our bank reconciliation statement. This is a paper 2 question, and we are in question 1 of it, which is a bank reconciliation and internal control question, and it has the following information. The following information relates to Zay Traders for June 2023. It says, note, the official bank statement used for reconciliation is sent by email to the business on the 25th of each month. The required wants you to show the entries that must be recorded in the cash journals by completing the table provided in the answer book. Then calculate the bank account balance on 30 June 2023. Then prepare a bank reconciliation statement on 30 June. We need to understand what a bank reconciliation is before we get into answering the question. A bank reconciliation statement is the business trying to correct the mistakes that the bank has made. Now, a bank is a separate entity altogether. So as a business, we cannot correct the books of the business. Whenever there's an error in our books, we go and we fix our own errors. We go to our own balance sheets and fix our own errors. We go to our income statement and fix our own errors. But when the error is in the bank statement, we have a problem because the bank statement is not prepared by us. It is prepared by the bank. So what we need to do when there is an error in our bank statement, the only thing that we can do is to first of all make sure that in our books the mistake is not on our part. So we start by correcting it in our books. Hence, most question will have you start by correcting the cash journals because the cash journals are still in your control. And once you are sure that your cash journals are correct, meaning you are 100% sure that the mistake is not on your side, it means that the mistake is on the bank's side. It means that they are the ones who have to correct it. And because you cannot correct the bank statement for them, what you can do is prepare what we call a bank reconciliation statement. Is to basically say, bank ABC, we have received a 3-month bank statement from you, and the 3-month bank statement that you have given to us has some errors, and we have prepared a bank reconciliation statement for you to know where are the errors and correct them for us, so that the statement that is going to come in the following month is going to come with these errors and these mistakes corrected. So we are starting with correcting our cash journals. This is the step where we make sure that the error is absolutely not on our side. And to correct our cash journals, we start by putting in our provisional totals, which have already been given to us in information B. For CRJ, they gave us 610,400, and for CPJ, they gave us 568 and 300, and we are going to use the information that has been given to us in order to correct, to find if these amounts have errors in them. If they are correct, we will leave them as they are, but if they have some errors, we are going to just adjust those errors so that we make sure that our totals are correct, and then we will know what is left for the bank to correct themselves. So when you go to information A, you will find a bank reconciliation statement that was prepared in the previous month. So we are preparing the bank reconciliation for the month of June. So in information A, usually you will find the bank reconciliation statement of the previous month. So in this case, our previous month is the month of May, and in the month of May you will see that they have put together a bank reconciliation. Now you have to assume that when they prepared this bank reconciliation for the month of May, they followed the correct procedure, meaning they started by correcting the cash receipts and cash payment journals of May, and then they prepared the bank reconciliation after. So what we are trying to do is to check that when they were preparing those cash receipts and cash payment in that month of May, did they make any errors? The errors that they in which carry to this bank reconciliation of May. Because if we made any errors on our part, we will then correct them in this month bank statement, so that we do not say to the bank you have made a mistake when the mistake was actually on our part. So you will see the bank recon, and they have given you some notes to give you an additional information. The first bullet says the outstanding deposit on 30 June appeared on the June bank statement, but the deposit on 9 June appeared as 12,420. Now you will see that in the bank reconciliation statement itself, the deposit on 9 June 2023 says 22,420, and they are telling you that the correct amount was supposed to be 12,420, meaning that this amount has been overstated and the mistake was on our part, meaning that it appeared on the bank statement or in its correct amount. So we need to go back and correct it in our statements. Now it's a deposit. The deposits usually go on the CRJ because they are an income. Cash receipts, so we receive them, they usually go in the CRJ. But because that one is a mistake, when you make a mistake in a CRJ where you correct it, you are going to correct it in the opposite journal, which is the CPJ. So with any errors of amounts being written wrong, amounts being overstated, amounts being understated, what you need to do is just to find the difference of those two amounts, and then that difference recorded on the correct side. So for this one, they are telling us that we recorded 22,420 when we were supposed to record 12,420. So you're going to take 22,000 and minus 12,420, and it's going to give you the correct or the overstated amount of 10,000 rands, which you are going to record on the CPJ, because it says that our CRJ was overstated by 10,000. So because a CPJ represents a plus and a CRJ represents a plus and a CPJ represents a minus, it means that when you had added a 10,000 in here and you want to cancel it, you will cancel it on this side, because this one will be a plus and this one will be a minus. A plus and a minus will cancel each other out. Back to information A, we look at bullet number 2, and it's EFT 121, and they say it appears on the June bank statement with the correct amount of 13,450. When you look at the May bank reconciliation, it says EFT 121 is 14,350, which means it's an error again in terms of overstating and understating. The one that is on the bank reconciliation is higher than the one that is on our information, which means it's an overstatement. It's an EFT. EFTs usually go on the CPJ, but then again, this is an error. So if it's an error on the CPJ, we are going to correct it on the CRJ. So we are going to find the difference between those two amounts, which is 14,350, the one that they recorded in their information, and the correct one in the statement is 13,450. This is a difference of 900 that we are putting in here. So this is just the calculation to show us how we got the 900. And then the last bullet point says all other entries appeared correctly on the June bank statement. So we can move on from information A. We have already dealt with information B, which is our provisional total. So most of the amounts that are going to correct our cash journals will be found in information C. The heading of information C gives you that clue because it tells you that this is information on the June bank statement from Perfect Bank, which did not appear in the June cash journals. This means that this information that we are getting in the bank statement, it is correct. It is in our books where it is wrong. And since we are correcting our books before we can send a bank recon to say that you have made mistakes, we need to correct the mistakes that are on our part. And these on information, see, as they're telling you they did not appear in the cash journals, it means we are the ones who omitted them, which means we are the one who made the mistakes. But since this are our books, we can easily correct them, starting with transaction fees. So when we are talking about transaction fees, we are talking about things like service fees, bank charges, the charges that you get from transacting with your bank. So it's a payment because we go to pay it and it goes in the CPJ at 890. The next one is interest on credit balance. Now remember, this is on the bank statement. On the bank statement, a credit amount is a positive amount. Remember, on our books, when something is on the credit side, it means that we are owing somebody. But on the bank statement, it means that the bank is owing us. Remember, we are that somebody in this scenario. So we are on the other end of the transaction. So for them, because it means they are giving this money to us, they would put it on the credit side because the statement, remember, bank statement, it is theirs. It comes from them. So it is their books. Hence, we cannot correct it. Hence why we are here preparing a bank reconciliation statement. So this is all to say that in the bank statement, when an amount is on the credit side, it means that it's positive for us. It's money that is coming to us. So this is interest. So it becomes interest income of 108. It goes in the CRJ to show that it is coming to us. And then the next bullet says, here we mistakenly skip bullet 3, but we will get to it before we do our totals in the end. We have a deposit of 42,400 from Growth Bank, being a fixed deposit that matured together with interest. So it's a fixed deposit that is matured, meaning that it is our money. We had put it in there on a fixed deposit. We could not use it for a while, but now it has matured, meaning it's being released to us to be able to use. So it is a plus on our side of 42,200. And then the next bullet says we have an EFT 182 for 3,120 in favor of Ace Garage Dealer, which was recorded on the correct journals. So meaning whatever they did in the cash journals with this amount of 3,120 is correct. But then they're saying to you, the bank, however, reflected it twice in the June bank statement. The bank informed us that they will rectify it on the next bank statement. So it is a mistake on the bank's part, but they have already seen it and they have told us that they are going to record it in the next bank statement. So remember, they said in our journals, meaning in our journals, in these provisional totals, that amount has been recorded correct. It goes in the CPJ. It means that it's safe, it's correct, is recorded correct in this amount. The only one who made a mistake is the bank. We cannot fix it in here because in here it is correct. So we are just going to remind the bank to fix it as they have promised. Where do we remind them? We are going to remind them in our bank reconciliation statement. So that means that this bullet point, we are going to leave it until we get to our bank reconciliation section. So we are going to skip that one for now. Then we have a data I pay send Zay Traders proof of direct deposit into the business account of 7,860 on 26 June 2023, being a payment on her account. The bookkeeper entered this amount on the CPJ. So this is our data. They were paying us, so meaning that amount was supposed to be CRJ amount, but instead of being recorded in here, it was never recorded, meaning it's not in this in this amount. What the bookkeeper did, he recorded it in here. So what we need to do is to record it in here. But I need you to understand, we are coming back to that issue of a plus and a minus. If I record this amount in here at 7,860, this amount is a plus that is going to cancel out the minus that was entered in this amount already. Remember, in here there is already a 7 in this amount, there's already a 7,860. That amount in here, it's a minus, and this one is a plus. A plus and a minus, if you do it on your calculator, it will give you a 0. So what you need to do is to enter this amount twice in here. This amount needs to be entered twice in here, and it will give us the correct total of 15,720. That is what we are recording in here. Remember, the first one is to cancel the one that is in here. The second one is for it to be the recording. Remember, this one cancels the one that is in here, so we have an effect of 0. So it's like nothing happened. And then this one records the amount that I paid. Hence, we have to do it twice, and it gives us a full amount of 15,720. And then the last bullet says ATM withdrawal by Zay, who is the owner for personal use. So this is drawings of 6,000 rands. Now back to bullet 3, a deposit order to the city council for 25,100 for water, electricity and utilities. This is obviously a payment, and it's going to go to our CPJ. So on CPJ we record 25,100. So that would be everything that goes in our CRJ and CPJ, and then we are just going to find our totals. On this side we have 669,328 on the CRJ, and on the CPJ we have 610,290. Our second required is calculating the correct bank account balance, and to do that we have a formula. It says bank account is equals to opening balance plus CRJ minus CPJ. The opening balance is the closing balance of last month, meaning the month of May, and we usually find it in our May's bank reconciliation. That would be the balance as per bank account in the May's bank reconciliation. So last month's closing becomes this month's opening, so it's from last month. So our opening balance, when we go back to information A, you will see there it says a favorable bank balance as per bank account in the ledger of 65,000 rands, and then we are going to add our income or our receipts that we have just calculated and corrected and made sure they are correct at this time, and it was 669,328, and then we are going to minus our payments, which means our cash payment journal, which was 610,290. Our correct bank account balance is then 124,038. You have to indicate whether it's going on the debit or on the credit, because this amount you are now going to now put it as the bank account balance in our current year's bank reconciliation. So you have to know whether it goes on the debit or on the credit. If whenever you punch this amount in your calculator you get a negative, that means that that amount would be on the credit, because to us in our bank account, anything that is not ours goes on the credit and anything that is ours goes on the debit. So when it's positive like this, we are going to say it's a debit balance. So put it next to it there. Some question papers will even indicate that you should state whether the amount is favorable or unfavorable. Debit means it's favorable because on the debit side it means that things are ours when it comes to a bank account, which is different and opposite from a bank statement. On the bank statement, debit means that it belongs, it's coming out, it's not ours, whereas credit means that it's coming to us. But in the bank account it does the opposite. Debit is good and credit means it's money that is going out when we are dealing with a bank account in particular. We can now finally go to 1.2.3, which wants us to prepare our bank reconciliation statement. The first thing with a bank reconciliation statement, as you see, is in the most answer books, they will not necessarily give you a framework, they will just give you a columns, empty columns. So you need to be clear with your framework. Our framework for a bank reconciliation statement starts with balance as per bank statement. Bank statement, we will call it B/S. Balance as per bank statement. I have left a little bit of space here because I don't know whether it's going on the debit or on the credit. Usually the balance as per bank statement is an amount that has to be given to you, or it will be a balancing figure. There is no other way this question of a balance as per bank statement will come to you. It is either given to you or it will be a balancing figure. In our information, you will see in information E, that's where they were supposed to give us our bank statement balance. It says bank statement balance on 30 June and it shows you a ... meaning that in that scenario, when they don't give it to you, the only other possible explanation for it is that it's a balancing figure. Now, when something is a balancing figure, usually you will get an operational mark so long as you have put it on a side that will make sure that your totals balance at the end. The only amount that would not be acceptable, meaning any other amount that you would put for something that is a balancing figure would be correct, except for one amount. There is only one amount that if you put it there, that would be the amount that would be wrong, and that is the amount that is the bank's balance as per bank statement from the previous month. So when you look at information A, before outstanding deposits, they would have given you balance as per bank statement from last month. In some questions you will see that line item. That amount is only there to trick you. You should never ever put that amount in here. It is the only amount that will get you a wrong when something is an operation, because when it's an operational mark, you will still get that operation even if it's any other amount that you would have calculated wrong, so long as it helps you balance, except for the one that belongs to the previous month, because you cannot have, according to them, you cannot necessarily have the same balance, or you cannot reuse. So it's about the principle of you understanding that you're not supposed to use the one from last month. It's either supposed to be given to you or it will be a new balancing figure in this current month. So since it's a balancing figure, we will leave it for now and move on to our deposits. Deposits always go on the credit side, so you will say credit outstanding deposits. Now this is money that we were supposed to deposit into our account. So for example, in a business, we have made sales for a day and we have called our clerk to go deposit the sales that we have made for that day in our business to go to a bank, could be Netbank, Absa, FNB, go deposit this amount. But instead of going today, they decide, you know what, it's late, I'll go tomorrow, or you know what, it's late, I'll go next week. So long as they are holding it, remember, in our books, we would have, in our cash receipts and cash payment, we would have recorded that we received money and we are supposed to have some deposits going into our bank account today. But so long as our clerk is holding that money for whatever reason that they are holding on, or they are dragging their feet, they have left it in the office, they have left it in the cash registers, they have even borrowed it to themselves thinking they will replace it on a later date, whatever their reason could be, it means that for as long as they are holding it, it becomes an outstanding deposit. So we are putting it in the bank reconciliation statement to say to the bank that, you know what, you need to expect a certain amount, because we have recorded it in our books, in our cash receipts and cash payment. So when you go to information D, you will see information D says the following items have, the following entries were in the cash journals for 30 June, for June 2023 only, meaning they appear in the cash journals. In our books, they're there, but they are not in the bank statement, meaning these amounts have not reached the bank. And one of them, you will see it says a deposit of 10,000 dated 29 June 2023. That deposit, it's in our books, but it hasn't reached the bank. So we need to alert them about it and say, look out, there is a 10,000 that is supposed to be coming your way. And then, since that is the only outstanding deposit we have, we are going to move on to our outstanding EFTs. EFTs will always go on the debit, so we will say debit outstanding EFTs, starting with EFT 188 of 6,780. We also have EFT 189 for 2,468. Now you will also remember that there was an information that we skipped in information C, a bullet point that we skipped in information C, that they said they made a mistake, they recorded an amount twice, which was 3,121. They recorded it twice, they saw the mistake, and they told us that they will rectify it in the next bank statement. So we're going to put it in here to remind them of it. It was an EFT 182. Now you know that EFTs go on the debit side, but because this EFT, it's an error, we are going to correct it on the credit side. So you are going to say credit bank error. Even if you say credit EFT 182, you would have still been correct, so long as it is clear that you are dealing with this EFT that they said they will correct it in the next bank statement that is to come. And then the last line item is our balance as per bank account. We know that our balance as per bank account, as we calculated it in 1.2.2, was a debit balance. So we are going to say debit balance as per bank account. So we'll just call it B/A, and it was 124,038. So now we know that for our bank reconciliation to be correct, this amount needs to be an equal amount. But since we don't have our bank balance as per bank statement, it means that we are now going to use that as our balancing figure. So it becomes easy that whatever is missing is going to be the one that's going to fill in our bank statement balance. So to do that, we are going to balance both sides using the bigger amount. So when you calculate this side and you calculate this side, you will come to see that this side is the bigger amount. So that means we will have to add in here, which means automatically our bank statement will go on the credit side, because you can see in here we have only two amounts. They make 13,121, whereas in here we have a total of, when you put it in your calculator, it will give you 133,286. This is these three amounts added together, and since they are this side, we know that they need to balance, so we are going to put this amount on this side as well, and whatever is missing is going to come here to make sure that this amount are going to give us this total in the end. So you will start with this amount minus this one and minus that one, and it will give you 120,165 here, which means that our balance as per bank statement is on the credit side. And that is your bank reconciliation question. Simple and straightforward. If you have any more questions, put them in the comment section below. To have YouTube recommend you more of my videos, be sure to click the like button and leave any questions that you have in the comment section below, and make sure that you subscribe so that you don't miss any of the upcoming uploads.